Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:13 p.m. That is Central Time. Today is March 15th, today being Friday. It's the big picture, long-term audio and video for the various different asset classes. And I thought we'd kick off and look at the US Spot Raw Industrials Index. So this is a commodity index that doesn't really rely on futures traded commodities. And it has been pulling back for the last 2 years, and now it's starting to improve again. It hasn't moved a lot, so a lot of the futures traded commodities have popped on the upside over the last week. We've had a breakout in copper, breakout in oil. Gold prices are still in the region of their peaks. Cocoa prices are accelerating higher. Palm oil is breaking out. Rubber is breaking out. And then we're seeing a little bit of steadier action in corn. Wheat is still really quite weak. And orange juice was limit up today. So certainly there's a lot more going on in the commodity complex, and that's also happening against a background where iron ore prices were dropping down through the $100 level in here today. So certainly a lot of movement here, and it does beg the question, are we in a new commodity bull market? Well, I think one thing that we can conclude for certain is that if it is a new commodity bull market, it is unlike that which we saw at the beginning of the 2000s. And that was primarily driven by the introduction of China and its massive young workforce into the global economy. Well, fast forward to 24 years, population growth has not kept up with economic growth in China. The entire population is obviously 24 years older now, and there aren't nearly as many younger people. And wages have gone up to about $8 a day. So that's on average, whereas you can get about $2 when you look at countries like India, and you can get less than that when you look at the countries in Africa. And those other countries have larger, younger populations. Or I guess to be more correct, larger populations of younger people. But then when we think about what is driving commodities, well, we have the energy transition, and there's still a lot of support for that in government circles, and there's a lot of policy that is being put in place to support demand for renewable energy. And then there's a huge number of moving parts within the energy sector, and this stretches from where the energy comes from to what kinds of energy will be used, how it will be transported to people, and then the ultimate end use of it for people and, of course, industry. Then we have the fact that interest rates have gone up a lot, and now we're starting to see more in the way of bills starting to mount up, and inflationary pressures coming not only from commodities but also coming from other parts of the economy. So that is certainly something that could contribute to higher inflationary pressures over the course of the next 6 to 9 months. And of course, then will economic activity be able to be sustained against that background? So we have to at least give some consideration to the potential that there's going to be a stagflationary environment.